What's up, guys? Stas here. Welcome back to another video. So as always, we're going to break down some stocks. We have some earnings to cover, some news from companies like Google, Waymo. We're going to break down Target, Lowe's in this video, a couple other ones as well. So yeah, let's do it. Hit the like button. Make sure to subscribe. And of course, join the free email stock newsletter for my free stocks sent to your email weekly. And check out my Patreon if you guys want to keep up with what I'm doing in my actual portfolio. All of those are down below. And let's dive into it, guys. So we are slightly in the red right now across the board, except for the NASDAQ when it comes to the U.S. indexes. The S&P's down 0.1%, Dow's down 0.75%, the Russell's down just over 1%, as QQQ's up 0.3%, thanks to Google and thanks to Waymo. We'll cover that here in 1 second, as Google's up 4.5%. So not the best day for stocks, but overall not the worst either by any means, right? And still clearly we're up massively off the lows. And just looking quickly at SPY and QQQ on this 4-hour chart, we're still uptrending. We're still breaking out. This is not a big deal at all. The fact that we're slightly in the red. In fact, buyers are coming in on the intraday, and we're actually starting to slowly break out. You're noticing the momentum building up on SPY and on QQQ on the intraday chart. Yeah, I wouldn't be surprised. Well, QQQ's already green, but I wouldn't be surprised if SPY were to go green later in the day. And again, QQQ's already green thanks to Google, which is up 4.5%. This stock has been going nuts. We're back in the low mid 170s now, and this thing is starting to break out, and I'm super excited about it, especially considering I was buying the dip like a madman these last couple of weeks, especially after we got news. We kind of got a scare in the stock. Oh my God, Apple's offering other search engine, AI options in their browser, blah, blah, blah. That sent Google tanking about 2 weeks ago. I bought that dip very quickly, and now 2 weeks later, we've recovered those losses and some. Now we're again back in the mid 170s, low mid 170s, which we haven't been in for a good couple months. So where we are now on Google, guys, is the breakout spot, 175. This spot is a big spot, where my big resistance. It's where my alert's at. We have to break out of there. And if we do, this is where we could start getting a lot more momentum on Alphabet. And why is it moving? Well, I'm sure you guys saw already today, but I'll cover it in this video for those that didn't. Waymo says they reached 10 million robotaxi trips, doubling in 5 months. Think about that, guys. And if you didn't know, this is Google owned, Google backed, right? We can see this is a Waymo car right here. I'm not sure where this is at. Looks like a Waymo self-driving car seen with a driver stops at a red light outside the U.S. Capitol in Washington, D.C. back in March 2025. So there's a Waymo out in the wild, out in D.C. So we can see Waymo co-CEO Takedra Mawakanda told CNBC on Tuesday that the Alphabet-owned ride-hailing company has reached 10 million trips, again doubling in the past 5 months. These are all paid trips, according to them, and they represent people who are really integrating Waymo Driver into their everyday lives. She said, speaking at the Google I/O Developer Conference, the 10 million figure includes rides in Austin, Los Angeles, San Francisco, and the Phoenix area, and Waymo is delivering more than 250,000 paid robo-taxi rides a week, Alphabet said on its earnings report back in April. And on Monday, Waymo said it had won approval to expand its autonomous ride-hailing service to more parts of the San Francisco Bay Area, including San Jose. And the robo-taxi company is part of Alphabet's Other Bets unit, and revenue in the overall category fell 9% in the first quarter from a year earlier to $450 million, and operating loss grew from or to rather 1.23 billion from 1.02 billion dollars a year ago. And while those figures include a number of businesses, Mawakanda confirmed that Waymo is not yet profitable, but the company is super focused on building a sustainable business, right? And she also said, Miss Mawakana, she said, we're proving out that it can be a profitable business. There's a path to profitability. So Tesla, get ready, baby. You got competition. They've had competition. Obviously Waymo and Tesla, they're going at it. And it says here, Waymo faces potential competition from Tesla, which has promised to launch its robotaxi service in Austin next month. Tesla, Elon Musk told CNBC on Tuesday that the plan was still on track and the company will start with about 10 vehicles and rapidly expand to thousands if the debut goes well with no incidents. So clearly Waymo's ahead of Tesla when it comes to robotaxis. And, Tesla's got some serious competition. Obviously, Waymo does as well. There's a lot of players in the space, but they're probably the top two. Waymo, Tesla, it's going to be them battling it out. And this is another reason why I love Google as an investment. It's not just search, YouTube, advertising, cloud. There's a lot of other bets as well. And although Waymo doesn't make money yet, they're not profitable, they're not making a ton of money on the top line either, it's still something that's exciting for the future here, for the next 5-10 years, because who knows? Waymo could be a massive part of their business in 5-10 years, of Google's business. You know what I mean? It could be bringing in tens of billions of dollars for all we know. I don't know that for sure now, obviously, but at some point, that's where it could get to. And clearly there's excitement here from investors as, again, the stock's up 5% on the day in the midst of a pretty overall red day for the stock market. So I'm excited about it, guys. I've been a Google shareholder for years. Like I said, I've been buying the dip. The last couple of months here I've been adding, right? So I couldn't be happier about it. What do you guys think, by the way? Let me know in the comments. And by the way, if you haven't hit the like button yet, hit that like button. Make sure to subscribe as well here on YouTube. And let me break down, some other stocks. We had a couple earnings today. We had Target this morning. TGT is the is the ticker. Excuse me, guys. Oh, my God. Might need some coffee. Cheers, by the way. So Target, which I'm not in love with this business by any means. I've been very critical about Target for a while. And this is why. They gave us another bad quarter. Target reported earnings per share, adjusted, by the way, of $1.30, which missed the $1.64 expected. And sales, get this, also missed. $23.85 billion versus $24.32 billion expected. So they missed EPS and they missed on sales, which is not good. And to make things worse, they lowered full year 25 adjusted EPS guidance, and they see sales decline of low single digits. Oh my gosh, guys. Not ideal at all for Target. Double miss. They lowered their guidance. And the stock, which heading into earnings was down like $70, $80 a share from highs, from the recent high at least, it was down like 40%. The stock's going lower. That's when you know. When a stock's down 40% heading into earnings and it goes down even more after earnings, that's when you know it's a bad earnings report and the company's struggling. Target now is at $94 a share, down 3.5-4% on the day. I don't necessarily see this getting better. So the next one here is Lowe's, L-O-W. I mean, eventually Target will get better, but, in these rocky times out there, not obviously crazy economic times, but not the best economic times either. I think people are going to start pulling back their spending. They already are a little bit. And you don't go to Target necessarily for necessities all the time. A lot of the products Target sells, you can go without, which is why, when you're looking at what to invest in terms of Target, Walmart, these type of retail companies, businesses, I think Walmart is the winner there, clear winner, because they're going to have people shopping there during all times of the economic cycle. They have a lot of groceries at Walmart, more necessities there that you actually need to live day-to-day life. So I think Target's in trouble. I don't know when it'll turn around. I think Walmart's going to be just fine, clearly, based on their recent earnings. And we got numbers from Lowe's this morning. It looks like Lowe's reported, let's see, by the way, Lowe stock's down 1.3% right now. Lowe's reported earnings per share of $2.92, which beat the $2.89 expected, and sales missed 20.93 billion versus 20.94 billion expected. So they they didn't double miss. They missed sales, beat EPS. Let's see, they affirmed their full year 25 adjusted EPS guidance, okay, and they affirmed their full year 25 sales guidance, not too bad there. They expect full year 25 sales around $83.5 to $84.5 billion versus $84.28 billion, not bad. So Lowe's nowhere near breaking the downtrend, but their earnings weren't too bad, not too bad at all. And Baidu is the last one I want to cover. Chinese company here, Baidu, BIDU is the ticker. They ended up doing, let's see, adjusted EPS of $2.55 versus $1.96 from last year, or not from last year, but that's the estimate. So that beat the estimate. And looks like sales also beat $4.47 billion versus $4.3 billion. So double beat for Baidu. And the stock is, it's been flat for months. I mean, it's trying to figure itself out. I don't know what direction it's going to pick. I mean, it tried breaking out, but now it's kind of looking like a triple top, sort of, over the last couple of weeks of trading. We've struggled to break out of the mid-90s, mid-low 90s. We just haven't been able to do it. Now it kind of looks triple toppy here. I don't know about you guys, but that's what I'm seeing. So be careful with Baidu. BIDU, again, is the ticker. So yeah, that's pretty much it for the video, guys. We covered some stocks, broke down some news from Google regarding Waymo. Big news there. And yeah, let me know your thoughts in the comments. As always, hit the like button. Do not forget to subscribe, join the Patreon, check out my free email stock newsletter. All of those are down below. And with that being said, cheers. I'll catch you in the next video.